Hello and welcome. In this discussion, which we've developed with the experts over at ProTax Accountant, we're going to tackle a really big topic, UK austerity. But more than that, we're going to break down how a decade of these policies is still having a direct impact on your wallet right here, right now.
So let's just start with a single number, minus 10.2%. What on earth does that mean? Well, for the UK's poorest households, that is the average drop in their income purely because of tax and benefit changes since 2010. To put it in real money, that's a loss of about £1,800 a year. It's a really stark figure, and it kind of sets the stage for everything we're about to unpack.
So here's our plan. First, we'll look at what austerity even was, the why behind it. Then, we'll get into the how, the two big levers the government pulled, taxes and benefits. After that, we get to the most important bit, the real-world impact. We'll uncover some of the hidden costs, and then finally, we'll talk about what all this means for managing your money today.
All right, let's set the scene. To really get a grip on what's happening with your finances now, we've got to jump in the time machine and understand the why behind this whole decade-long financial squeeze.
This quote here from George Osborne, the Chancellor back in 2010, really tells you everything you need to know about the mood at the time. The UK was still on its knees from the 2008 global financial crisis, so the thinking behind austerity was, on the surface, pretty straightforward. Slash public spending to cut the national debt, prove to the world that Britain could pay its bills, and hopefully stop a complete economic collapse.
Now, what's crucial to understand is that austerity wasn't one big event. It was a slow, rolling series of decisions. It all kicked off in 2010, sure, but then in 2011, VAT went up. That's a tax that hits you every single time you buy something. Then came 2013 and the start of the benefit freezes. This meant that while the price of everything was going up, the support for people who needed it most just stood still. And more recently, the freeze on tax thresholds. That's a policy that's still with us and is set to continue right into the 2025-26 tax year, and maybe even longer.
So the goal was to cut the deficit, but how do they actually do it? Well, the government basically pulled two massive levers to change the country's finances. Now let's look at how this was done.
This slide lays it out perfectly. It was a two-pronged attack. On one side, you had major changes to the welfare system. Benefits were frozen, meaning their real value just melted away. New, tougher rules were brought in, and housing support was cut back. But at the same time, they were changing the tax system. The personal tax allowance, how much you can earn before tax, was actually increased, which was a tax cut for many. But, and this is a huge but, the tax thresholds were frozen, and that unleashed this quiet, powerful force called fiscal drag.
So, what is fiscal drag? It sounds complicated, but it's basically a stealth tax. Think of it like this. Inflation and your pay rises are like a rising tide. But the posts you tie your boat to, those are the tax thresholds. They're stuck in the mud. They aren't rising with the water. So eventually, that rising tide lifts all the boats, even the smaller ones, up into a higher, more expensive mooring zone. That's fiscal drag. You get pulled into a higher tax bracket not because you've become super rich, but just because the system hasn't moved. Stay with me. The next point might really surprise you.
And here's what that looks like in the real world. This data from the Institute for Fiscal Studies is just staggering. Back in 2010, there were 3.3 million higher-rate taxpayers. Fast forward to 2024, and that number has more than doubled to 7.4 million. This wasn't an accident. This is the direct result of freezing those thresholds while wages and prices have been climbing. It's one of the biggest and quietest tax rises we've seen in a long, long time.
So with that in mind, here's a quick pro tip. Because those tax thresholds are frozen solid, being smart about your tax planning is more important than ever. Things like putting more into your pension or using salary sacrifice schemes, if you can, are really effective ways to lower your official taxable income. It could even be enough to keep you from tipping over into that higher tax bracket.
Okay, so we've done the why and the how, but let's get down to brass tacks. What does all this policy stuff actually mean for your wallet? This is the big so what question.
Let's use a real-life example. Let's imagine a freelancer in London making about £35,000 a year. Now, if you compare the 2010 tax system with the one for 2024/2025, they're actually paying around £1,600 less in tax and national insurance. That's mainly down to that higher personal allowance we talked about. So for this person, it looks like a net win. But that's not all. Here's where most people go wrong.
Now let's flip the coin. Let's look at a low-income family, renting in London with 2 kids, earning £25,000. Now they get some of those tax cuts too, but the changes to the benefit system hit them so much harder. Their total benefit entitlement is about £3,100 a year less than it would have been under the old system. The point is, the loss in support completely wiped out any tax gains, leaving them way worse off.
And look, numbers are one thing, but this quote from a report by Oxfam, this is the human reality. This is Lorna, a mother in London. Her words just cut right through the spreadsheets and the policy documents. It's not about deficits. It's about not being able to afford a packed lunch for your child. It shows you the real devastating pressure these changes put on families.
So, as we've just seen, this story had very different endings for different people. And when we zoom out, you can see that these policies had really unequal consequences for different groups right across the country.
This chart might look a bit busy, but the story it tells is crystal clear. The further down that black line goes, the bigger the financial hit. And if you look right at the bottom, you see the biggest loss by far, over £8,000 a year on average, was for households with both a disabled adult and a disabled child. The data shows again and again the families dealing with disability have shouldered the heaviest financial burden of all.
And here's another key finding. When you add up the total financial impact of all these benefit cuts and tax changes, women have carried a staggering 72% of the burden. That's because women are more likely to be in low-paid jobs, more likely to be carers, and therefore more reliant on the social security system that saw the deepest cuts.
And here's something you might not have thought about. Did you know the impact wasn't just on your payslip? A huge part of austerity involved cutting funding to local councils. That had massive knock-on effects for the services we all use. Libraries closing down, longer waits for social care, less housing support. These are the hidden costs. But if you rely on those services, the impact feels very direct indeed.
Okay, so we've taken a long look back at the last decade or so. But what does it all mean for us today, right now? Well, that brings us to the final and maybe the most important question: now what?
This is the key question we all need to be asking ourselves, isn't it? We're living in a financial system that has been completely reshaped. Those frozen tax thresholds are here to stay for the 2025-26 tax year and probably for a while after that. So in this new world, how can you actually plan effectively?
So, let's just pull it all together. What do we need to remember? 1. Austerity wasn't a quick fix. It was a long-term project of tax changes and spending cuts. 2. Fiscal drag is real, and it's quietly pulling millions more of us into higher tax bands. 3. The impact was hugely different depending on who you are. And 4. The benefit freezes hit low-income families and disabled households the absolute hardest. The biggest takeaway of all? Just understanding this new landscape is the most important first step you can take in planning your finances.
Now, it's really important to say that the financial system is incredibly complex, and everybody's situation is different. Everything we've talked about today is for general guidance, just to help you understand the big picture. It absolutely should not be the only thing you rely on when making financial decisions.
To really navigate the system and make a plan that works for you, you really do need to talk to an expert. The specialists at ProTax Accountant who help develop this whole analysis can help with everything from personal tax to business accounting. You can get in touch with them for a consultation. You can reach them on WhatsApp or by phone at 079-8568-9912 or just drop them an email at info@protaxaccountant.co.uk.